This is an indicator right here. This is called the Keltner channel. This is another. So remember I was telling you about the EMA, the moving average. Because we're on our time frame. We figured out our time frame. We have okay. Let me.
How long is each bar? A minute? Is it still a minute?
Each bar. So that's what we're choosing here.
3 seconds.
In our candle time frame. Each one of these, it decides how much the candles are.
Yeah, each, okay.
So this is.
That shit dropped hella then in 3 seconds.
From S5 to all the way to hour 1 to 1 day to M30. So.
Oh, okay. Yeah,
each one of these is 30 minutes, and they have a little timer right there.
Right.
So. Every candle on here, the time frame decides. This time frame decides the time of the candles, okay. And then where you decide how much you want to place the trade for, how much time you want to place the trade for,
separate.
Is here. Yeah, that's separate, and you can come up here and decide here.
Okay. Do you ever shift it out to longer, like looking at the bars longer, just for like info?
Absolutely, that's something great that we'll talk about. Top-down analysis. Top-down analysis. So, for example, when we're looking at the M1 chart, and this is where some of the patterns, like the double bottoms and the double tops, are able to help you decide like something called a bearish engulfing. So this is one of the most easiest patterns to understand, is an engulfing pattern. Let me see if I can find it so you can see it visually. So what we're doing is we're scalping. So an engulf, oh, this is a perfect example of an engulf. Okay, so I'll teach you first of all what support and resistance. So we're on a downtrend as of now. We look to over here. These are indicators over here. So we can come here and say, right here, price went up, acted like it was gonna go down, rejected a little bit. There's a little bit of consolidation right here. So therefore, when price was coming down here, it used this as an example. We're just looking, and mind you, so this is 1201. So this right here,
an hour ago, really.
All this is just an hour ago, looking at the 1 minute candles right now. We're looking at the 1 minute candles right now. So each candle, that's just 1 minute ago, 1 minute ago, 1 minute ago, 1 minute ago. So we're just looking at the data from literally an hour ago. That's telling us when it got into this zone. See, and then this is where price flips and goes up. This right here, we use this downtrend, use this as support. So it's supported, resisted a little bit here, but so far it's being supported from down here, and now everything, so a small resistance here came down, but what is this now? Support, because it went back up. It's going back up. Got a small bit of resistance here, of this red resistance, so we came back down. And then from right here, from this previous candle, from it saying no, since we did go above it here, now we're using this. Before, this was resistance coming here at first, mind you, this not being here. It came up to here, it hit this and said, okay, we can't go any higher. We can't go any higher. And then when it broke that structure of that resistance, we said that now that's not in play. So now it's a bias flip. So now we come down here, and once it uses a little bit of red, we say now it's using it as support. Rather than before it was here it's resistance, because we're on an uptrend.
Right.
But when we come down for this small little dip right here into this downtrend, no, it resisted where the support used to be. So now this is a resistance. So now so it resisted up at the top, and then it came down to where the previous resistance was, and it used that as new support to leverage it back up.
Yeah, I guess I can see that.
So you kind of getting that a little bit.
It used like the old high as a new medium kind of
as leverage like to say, okay, we got momentum from this last time.
Right. It's not going to drop too much further from that one.
Exactly. So, for example, it continued to go. The trend continued to go back up. Now it seems to be like it might be at an all-time high over here. Oh, but it's not. We got evidence right here from the hour before that. As we got here, I bet you we'll come here and it'll be something right over here on this other side that's sitting right next to it. All in this area. It all sat above here until it broke the structure here with this major candle. It was using this all under here as resistance, trying to come downward. It resisted that like, nah, now we're supporting it for the greens. So the reds are being resisted here for the greens to support upward. So basically, most of the time, reds will be resisting and greens will be supporting because it's supporting it to go upwards. But here, and then to answer your question, we'll talk about top-down analysis. I wish I was able to, that's one thing you're not able to do, is you're not able to back test properly. When the market's not open.
Right.
See how many days there is. Yeah, see, it's not nice to look at. So I'll come here. Example of it. So I'm using the 1 minute time frame when I'm trading in the New York session from 5 to about 11. Jazzy might be home. I'm using the 5 minute. I'm using the 15 minute. And I'm using the 1 hour. And we're trading on the 1 minute. But to your point, we're using these other time frames as information, as confluences, and I'll show you how. Oh, this is a perfect example.
The blue is like the resistance almost.
The blue. This right here.
Yeah, or the
200 EMA.
Either one.
No, these are, so this specific one was what I told you earlier, the 200 moving average. So all this is a moving average. So it's averaging out the highs and the lows.
In a longer time frame, basically? Or it's just, you're saying it's averaging them
out? It's averaging them out, but mind you, each individual time frame is gonna look different. So it could be on an uptrend on the 1 minute in the last hour, but the last 5 hours of this is actually a downtrend. So we'll be looking at how that correlates, and I'll show you. It'll be tough, but it'll make a little bit more sense. So, for example, do you see anything here? Any pattern-wise? Yep. You see that W bottom? Yep. Bam. Got two double bottom points. So at this point, so now let's try to get support and resistance from this. It looks like we came up here to what looks like a high. Right. Use this high, and this high was resistance to this green uptrend. And so therefore it resisted, and now we're falling. We're bearish. We're in a bear trend. Bearish. Something back here, some type of information back here, or as you see, this is an indicator right here. This is called the Keltner channel. This is another moving average. It's basically like the stochastic being on the chart. So anytime, but you'll notice a pattern with it. Anytime it gets outside of this Keltner, outside of this blue area, it wants to come back down and retrace into it. It wants to get back into the middle. So once it came back down, okay, now I'm in the middle. Now it broke through, continue to resist, and use this area as support because of previous information. On top of, if we look here, what does our oscillator say? About right here, it's oversold. So it wants to come back to the middle. The oscillator always wants to be around here. Always wants to be in the middle. So every time the oscillator hits here, what does it do? High. It comes right back down. Comes right back in, but you got to be careful for fake outs. It said, oh, I'm acting like I'm going back down, but I'm not. I went back up. So look at it like this. You see these green candles are this green line. These red candles are this red line. So this is literally this playing out on right. So right here we have an uptrend. Right here we have a small little up loop right here, and it came back down, and then we followed it back to this high point right here. And then what does it do? It dies. So now a little bit better of a visualization is we're low on the stochastic now. We're outside of this Keltner now. So we're oversold. We're outside, basically meaning we're oversold as well, or we broke outside of where the channel should be, where the candle should be inside of there. So now that's two indicators for us. That's two confirmations, two checklists to say, okay, for this job to be done, we got 3 checklists. 1, 2, 3. These are the 3 things we need to do. Those are 2 of them. And then we would have used whatever previous data we had, whether it be a support or resistance zone, as the third confirmation to say, okay, this is the third thing telling us that around this area, we gonna get some consolidation, or we're gonna get some, really the only buy entry would have been this candle or this candle playing on the support and resistance of it trying to get back to the middle. But you can see that it was bearish. One thing you're gonna learn is don't fight the trend. You know what I'm saying? It's a tad bit of consolidation inside of here because it's low and because it broke outside of this channel. So it came down, but it wanted to go back up, and as soon as it touched the middle of this channel with that wick, it came back down to this red candle. It sat inside of this channel a little bit, kept coming down, kept falling down. It continues to creep out of here more. Once the full candle is outside of this channel, it said, we're gonna need to bring you back. So it resisted right here. Use this as its resistance for red, which turns into support for green. So it resisted the downtrend right here, and it supported the uptrend. But where it supported the uptrend, this previous information right here became resistance for the uptrend.
Do you have the lighter?
And it became resistance for when it tried to go up there. It said, nah, you see, last time we was here, we just kept to fall. So it continued to fall with this candle. Continue to fall. And that's this right here. You're going to figure out what type of trader you are, whether you're trading against the trend or you're trading with the trend. Mm-hmm. A lot of what I'm doing is trading against the trend.
Right.
We're looking for where it's exhausted, where it's so obvious that it needs to come back to the middle. That's where we're getting it. Or it's way too low. It's way too low. And all these 3 things are telling us, confirming to us that it's too low. And then this is where the signals get hella cool, bro. I put all that information into this. So, like I've been telling you, stochastic overbought. Stochastic overbought. This goes from 92 to 6. Anytime stochastic is like 84 or higher, I will get a confirmation of it being too high up here. That's one confirmation that adds to it. The Keltner channel that I've been telling you about, the Keltner break. So there's a minor Keltner break upwards. The rocket means upwards. That will be this channel right here. It broke up out of here. It broke up out of here right here. We're looking at literally this setup. So it's too high. It's way too high clearly out of the Keltner channel, and it's at the highest point on the stochastic. What was the next candle? Red all the way down to here.
Because of what?
Because of being overbought. It's exhausted.
Right.
It's exhausted. Look at this. It's putting all this work to get up to this green trend, to get up to here. And then if you look here, what's right at this?
The old high. Okay.
Bam. Now this was previous. Last time the green trend tried to come up here, no, you would think, but that's when the break of structure comes and you see the consolidation.
So I cut you off. You said what was happening right there?
No. So to your point, so when the green trend was going, previously it resisted somewhere down here, and it went down. Now it's like, nah, fuck that. We getting back up there again. So you see a little bit of consolidation, a little bit of up and down. But this one, you see how it was quick, clear, like, okay, high, now we're back down low. And then it kept falling. This one went up, came down, went up, came down, went up, came down. Oh, went high.
Consolidation.
So now we're like, okay. But what does consolidation do? Consolidation allows it to bring it back to the medium.
Yeah.
So then it can get more momentum for the buyers to continue buying in the uptrend. So the bulls are green and the bears are red in the bullish trend, and that's when candle structure and we'll see it play out. So now that it broke this structure of this previous resistance, it used it as this red candle came down. It said, oh, nah, we're not going all the way down there. It's supported. It used this now for the bull trend, for the bulls to, and it's confusing because the bulls are, green, but bulls like red, but just trying to, yeah. So the bulls, it used the bulls now. All this, before it used it as resistance. But now, because it consolidated for a little bit of time, it touched the middle again, and it was here.
Oh, even like a quick touch?
Yeah, quick touch. It said, okay, I got some momentum again. So then buyers all around the world, buyers in the market, realize, okay, it hit the medium. It's at the medium. Let's get in on some buys with the continuation of this trend.
To keep going up.
To continue going up because we see potential break of structure here. Because last time it came here, it folded. This time it showed us some fight. It showed us some resistance, and we would have known how. We see this red candle right here, this doji. It dojied up. So that was one of these strong green candles, but then it pulled back before the candle ended. So that'll let you know, okay, it's trying to fight up there, but it's just consolidating right here. It needs a little more momentum. So then it went down a little bit. And when that came down for that touch, it did the same thing that this candle did. It came down, touched this, used this now as momentum, the middle of the Keltner, used the middle of the stochastic. It's just the middle, the moving, it's just used the moving average basically without these things on it to get some leverage to say, fake out. I thought we was going down like last time. Gotcha. And they do that. And that right there is, it's a certain type of candle. I forgot what it's called. But it's basically a fake out candle. And they used all that money that all the sellers tried to sell to get this to sell from here last time. It recouped all that money into that momentum to go upwards. So, it's a liquidity sweep. So this right here is a liquidity sweep.
It's getting scraped up on that.
You getting y'all thought this was going down like this one. Y'all thought this was this candle right here, but now before the finish, it swept back up. And then as that swept, it said, okay, now we got momentum to keep going upwards.
Just made a lot of money right there.
Yep, they recouped their money to be able to continue going. You know what I'm saying? So you'll see what happens. But to your point, I'm looking at it like, okay, this breaker structure got broke, but I see the double bottom setting up. I see the full double. That confirms, this breaker structure confirms the double bottom setting up. Because
so what's next? What do you think's next after this?
Now I'm looking at the next point of resistance. Because momentum, look at momentum. It's way outside of the Keltner. It wants to be touching here. So now it's blew through that. On top of it's way too high. It's way oversold. So you see this super powerful strong green candle. Then it did a little bit of a sweep. Did a little bit of a grab. Y'all thought we was going up there. Then it came back down. And this is where it finished. Not all the way up here, where that body ends, is where it finished. So this next candle, I'm like, what's this next candle? I told you earlier, the doji candles, basically a doji, indicate direction, change the direction. So I'm looking like, okay, that's a doji right there. So I got,
Now it's gonna go back down.
I got the doji confirmation. I got the previous zone. I got the double bottom setting up that broke right here, but it's got, so the double bottom is proof of the breakup structure here. Because if it came back down here, it would have been a double top. So then the double top just means basically it's a super resistant support. It's a super resistant zone right here. That's what the double top pattern is telling you. So since it broke that, it's telling us, nah, it's continuing with this uptrend. That's what that breaker structure consolidation is telling us. But what we know is the candles really want to be here, and they want to be in the middle of here. So every single time, it's came back down. So what do we think it's about to do right here?
Yeah.
I think it's about to come right back down to this middle. I don't know if it's gonna fully fly down like this one did, but I'm gonna get in on my 1 minute up here. You know what I'm saying? That
Pretty much right now, is that what you do right here?
yeah, that's basically what I do right here, because last time it broke out of the Kellner up here at this zone, literally doing the same exact thing, because of the pattern, it went down. On top of, in both of these areas, it was oversold here. I wait for it at my zone. Simple. Slight. You see what it does? It dojis up, like, remember I told you they ain't always perfect? And that was a little bit of a sweep that it did. It faked people out right there. It was like, okay, y'all think we about to go upwards? We acting like we about to do the uptrend on y'all. You feel me? But nah. We holding firm at this zone. We holding super firm at this zone. And
Oh, it's not gonna go far down, but just right there.
yeah, it's not, because it's only 1 minute. Now, if I had it on 10 minutes,
7 for 8 back to back.
if I had it on,
wrap up the session there, and I'm gonna tap back in with y'all.
if I had it on 10 minutes, then we would be waiting 10 minutes. Let me show you. So we see the double top rejected here from this. Damn, this big ass downtrend came down here. The red was resisted here, while the green was supported here. The green was supported to go up. Had a little bit of consolidation here. The green got resisted, while the red got supported to go down. The red got resisted at that previous zone, while the green got supported to go up, continued to go up. Same exact thing. We're seeing support and resistance. These are bearish engulfs now, what I wanted to tell you about. A bearish engulf is, or a bullish engulf is a bearish engulf and a bullish engulf. So it's an engulfing candle, basically meaning, so you see how we got this uptrend right here? This red candle, you see how this red candle kind of engulfed like half of that damn green candle? It pretty much was damn near half of the size of that. It supported it a little bit, but it never went past that for real, and it continued on into this. Let me get a better example. I can find a better example of an engulf, because the engulfs they last all the way to that. An engulf is something we correlate from the 1 minute to the 5 minute to the 15 minute to the 1 hour, but they also can happen individually on their own charts themselves. So for example, I have like so these are all looking for, see, this is a double indicator, meaning what are these? These are the indicators. These are the stochastic, Keltner, the moving average. So I'm looking for 3 confirmations to send a signal. On top of what am I telling you in all, I'm telling in every message. For the 15 minutes, the market is going upwards. For the 1 hour, the market is going downwards. For the 4 hours, the market is going upwards. So that you have this understanding of the market knowledge without having to click through every single hour time frame to see what it is. Let me see if I can find it in golf. So we have a double indicator. 3 closed exhaustion would be 3 closes above the cylinder in any direction. So 1 closed, 2 closed, 3 closed. We think it's turning around. That's the confirmation. That's the 3 closed exhaustion that we're looking for. It's exhausted. It's
anytime it does that within what time frame? The minute or the?
Yeah, this is all on. All these signals will be for the 1 minute time frame. And then let me just see if I can find it engulfing. Because definitely something I look for. But it doesn't happen as much when they all align on the I'll see right here. So this is an engulf signal. 1 minute, 15 minute, 1 hour. It's basically the direction is flipped by an engulf candle, but it's hard to explain without seeing. So I'm gonna see if I can find one. But show you some big dog trade. So we got the double top up here that previously used this line as support to come up here, resisted up here, came down. The last time it came down to this line, this one right here, it pushed back up, but it broke that structure on this one, right? It came past this previous resistance that was there. If it would have held there, that would have then turned to a double bottom, but it broke past that this time. So now I'm looking for, so since it broke past this, I'm looking for now it to come back up and to use this as the resistance to come back down. But if it broke it now, because I'm planning on the downtrend.
Right.
I'm planning on the downtrend, so now it'll do this, support and resistance again. Every time it reaches a new high, the previous high is now the resistance. It'll go up to that, it'll resist down. Then it'll come back to a new previous support, go up for a little bit, and then it'll come back down on a trend. We had the double top, it broke the structure. So remember I was telling you about the EMA, the moving average. Pretty much every time that it touches this EMA, you get in some type of reaction. So I use my other indicators on top of the pattern recognition. All right, y'all. My camera died at this point in the video, so I'm gonna let y'all just enjoy the rest of the game, the rest of the video without the camera being on us. You're still gonna be able to apply the game and get the game. So let me know how y'all felt in the comments. Like it, subscribe, share it with your people. Let me know any type of game you may have got from it. And y'all already know the vibes. Until then, stack it up, stay blessed. It didn't use it as support, it broke that structure of the EMA. So now bias flips. So now when it comes back, I'm looking for it to resist off of that.
So that's like the blue is how you look for the resistance or the support, basically. It's a part of it?
It's a part of it, but the candles are okay. So the blue determines the bias flip on each side of it. Mm-hmm. Determines your bias on each side of it but without that, you're still gonna have that bias of the trend, because this is just basically telling you when it's on top of this, we're looking for buys. When it's below this, we're looking for sales, because that's what the average. This is the average. It's below this, so we're looking to sell.
That's like a very common, anyone can see that.
Exactly, right. So, but the candles themselves tell you, and the indicators tell you the movements. So I'm like, okay, I don't see it holding there.
Did you hit that?
And it fought me. Look, it fought me like a motherfucker.
You know what, go for 500.
Oh, I do this. I can tell you.
Cash.
That's what I do.
Cash. Cash it. Yo! Cash it. Green bean. Oh my goodness.
Come on now.
Oh my goodness.
And that's
oh my goodness.
That's 1 minute. I'll give you another example. And what you'll see from a lot of my things, double top, double bottom, double bottom. I like when I say I'm looking for my setup and my strategy.
That's a big part is the double, and then it's gonna go back the other way. So if it's a double top, it should go back down.
So basically, it means that it broke the previous support. So it broke this previous resistance zone. On this, it came up here. So we had an overall downtrend, right? We, for the bears, for the red candles, we resisted right. They got resisted right here. They could no longer go up. So the green candles used their resistance as support. Okay, that supported us to hop up and get a little momentum. Then we look back to this previous area, this previous zone right here. Last time it came here, it supported it to go up. But now this bull trend is using it as resistance. It said, nah, we're not letting you pass on this one. So the bears are going down. But what just happened just like this one? So that's the pattern forming, but the double bottom is the break of structure. So now, if it were to be a double top forming, what would it do here? If a double top were to form, what would it do there? It would continue to use this just like it did on these ones to go down to form the double top, to come down, and it would use it as resistance right here. Use it as resistance right here. This green candle would be resisted if it was a double top. But because it broke the structure, we got the double bottom. That's now not a double top. Which means basically momentum is broken, structure is broken, from previous market data it's broken. So it's an exhaustion right now. It's unnatural movement now. The chart's not moving the way it should be moving. So now we have opportunity to look for it to, yes, reverse. So, but where do we look for that opportunity at? We look for that opportunity when when it's outside of the Kellner, and I changed these to red and green so you can see this is where as high as the greens are supposed to be, this is low as the red's supposed to be. And once it gets outside of that, just remember the 3 close, 1, 2, 3 close exhaustion. You've seen it before. On top of what I say was one of my major indicators. Anytime it touched this motherfucker, that 200 EMA, that's gonna become your best friend. You're gonna get a reaction. It's either gonna resist that or it's gonna fly through that motherfucker. But the things behind you, the things that you're looking at, the exhaustion outside of the Keltner, this being oversold, the oscillator, the stochastic oscillator being, overbought, lets me know like, it looks like it's getting a little exhausted up there. And last time it came to this support area, last time this green tried to make a little push up here, they said, oh no, that's not happening. So that's this bread and butter for me. I take this 100 out of 100 times, even if I lose. Cause this is it. This is look with 14 seconds left. It's already past 3 candles downwards. We're already 3 candles right. Safe. For the most part. You know what I'm saying? Good. Any questions?
Send me a picture of that one right there, I guess. Yeah. Because it's the 3 stackers. I remember the 3 stackers and then like the old resistance.
And then I'm working on this video. Let's see. And then you're gonna see, bro, the psychology is
the important part.
Man, for real, bro. For real, but I got exactly how the signals work. So everything that it takes to be able to give a signal, these are all our confirmations, whether it's the 200 EMA, a breaking structure of it, a wick touched it and it came down, a New York high, a New York low. Those are all the things that can be sent here, but it has to be a minimum of 3 of them in the same direction, pointing to say buy or sell for it to send to the Discord. So this right here is just another indicator. So when you're trading, you want to be looking at this too, just in case you've seen an idea but you're not sure. Everything I didn't put onto it, it knows everything I know.
So
But
it's going to
then-
pop up for you
But there's so many different.
as another confirmation.
But there's so many different EU to like how does it know?
Euro USD, USD JPY,
Oh, it tells you. Okay.
CAD, GBP
Okay,
USD.
okay. So
I coded
it sends it all.
into basically what it's doing is looking at the futures markets, because this is a mimic of the futures markets and the forex markets. That's what PocketOption does. So it's looking at those markets, it's looking at the market, and it's sending exact replications of what's going on the 1 minute time frame. And it's basically everything that we just identified. It identified it, and then what I use this as is pretty much the fourth confirmation. Like, if I'm wrong, I didn't put in so much work. I didn't put in so much time. Like, it's
What's the fourth one?
the signal itself.
That's what I was saying.
Yeah, the signal itself. But mind you, the signal can send up to 5. So look, this one got 4. Displacement, candle, counter, break, stochastic, and a wick. So it can send up to 5 to 6 different things. But I didn't want to convolute it, so I kept it at mainly 3 for a signal. And like for example, the engulfs, they usually won't line up with anything else, because I have specific setups that it's looking for. So the double indicator setup, or let's see, the 3 codes exhaustion like we spoke about, or the bread and butter setup. The bread and butter, you know what that one is? 200 EMA. So the bread and butter will be attaching. Let me give you an example of the bread and butter. I'm on 200. Oh, and this is beautiful breaker structure. Let's see. See if I like the ones that okay. So previous was it last time the bulls came up to this zone right here, they sold off. Last time they came up to that zone, they sold off. This is that zone back there. This is basically a lower version of it. So it acted like it broke that structure, but I saw the wick. Saw the wick on it. Saw the wick. I seen, okay, that's it's still got some time to go within before it hits my zone. So I'm still looking for it to go upwards. So I waited for a little bit of red pullback to then be supported by what this was right here. So this line is that high zone back there. This is another time it came up, made a high. Since it broke past the EMA, that's a break of structure, blew through that, it pretty much came up to this zone, blew through this zone, came all the way up here, but then it resisted up here. But I know that it's not fully at the zone. It's resisting because it's exhausted. Look how far it is outside of the Keltner. It's almost 3-4 candles outside of the Keltner, and it's all the way up here. The stochastics all the way over bottom. So I'm like, okay, it wants to go upward still. It just needs a little breath. It needs a little consolidation. So as it came back down as it got a little bit of red, but what kind of candle was it? It was a doji candle, doji red candle. So I'm like, okay, doji candles indicate change of direction. So that means that's, and on top of the wick is an indicator of the of the body of the candle. It's not a strong body candle. So it just did that to sweep a little bit to get some momentum. You know what I'm saying? So then I'm like, okay, I'll use this previous place that it broke through on this one to now support it rather than use it as resistance. Rather resist it like it did on the first one. You know, we just going upwards from there. They there, and it's opportunities to make this money. And like, okay, so let me see.